The Federal Reserve, a popular topic during Tuesday night's presidential debate. While some blamed the central bank for no Social Security increases, Senator Rand Paul held the Fed responsible for widening income inequality.
That as the Federal Reserve destroys the value of the currency, what you're finding is that if you're poor, if you make $20,000 a year and you have 3 or 4 kids and you're trying to get by, as your prices rise or as the value of the dollar shrinks, these are the people that are hurt the worst. So really, we need to re-examine whether we want a Federal Reserve that's involved so much in determining interest rates.
And this conversation, very important going into the December meeting. Joining us right now is former Federal Reserve Bank of Dallas official Danielle DiMartino Booth. Danielle, thanks very much for joining us. Welcome.
Well, thank you for having me this morning. Good morning.
So let me ask you, I know that you worked with Richard Fisher, the former head of the Dallas Federal Reserve, very closely. And he, over the last couple of years, I guess, has been talking about a strengthening economy. How do you see things right now, Danielle? When you look at something like, retail sales under pressure, Cisco coming out warning that the next quarter is not going to be so great and we continue to have this weakness due to international markets. What's your sense of the Fed and whether or not they see this economy as strengthening and raise interest rates next month?
Well, obviously, we heard quite a bit of views yesterday. There was a lot more confusion, I think, that came into the market from all the Fed speak that we saw yesterday. But I think the bottom line is that to Senator Paul's point, the average household in this country is being squeezed, and I think we see that playing out in the retail sales data and some of the things that we've been hearing out of Macy's and Nordstrom's these last few days. Once you get past the essentials when it comes to what makes up a household's balance sheet, there's oftentimes very little in the way of anything left to go after what are not considered to be necessities and pay for those.
So what does that mean in terms of the Fed moves and where we are in the economy? I mean, obviously the consumer is incredibly important, 2/3 of economic growth, and you're seeing pretty weak results from some major retailers like Macy's, Nordstrom, and about a month ago, Walmart.
Absolutely. But at the same time, sometimes you'll see a lot of strength in the headline retail sales figure. And I think that that's largely a reflection of the fact that we've seen credit get where credit can get in this Fed cycle, and that would be with auto sales and subprime automobile lending. And I think that that's largely what's bolstered retail sales. Once you get beneath that that headline figure, though, you see more underlying weakness. And again, it's a reflection of the fallacy of what policymakers call the wealth effect, which I consider to be truly broken.
So what does your gut tell you about the Fed next month, given all of the news we know? Do you think they'll raise rates?
Chair Yellen yesterday couldn't have been more neutral had she tried. The doves cooed, they said what was expected. The hawk said what was expected. But again, the chair herself was very, very inconclusive yesterday in her results. I think that they're going to follow retail sales that come out this morning like a hawk. I think that any kind of a surprise figure in the upcoming November non-farm payroll report could also be a game changer. For all we know, October was an anomaly. And we've seen a renewed downtick in oil prices. And again, they keep hoping that it's going to be transitory in nature. But as long as oil prices stay as weak as they are, we do see weakness emanating from that.
Danielle, let me ask you again. What does your gut tell you? Do you think the Fed will raise next month?
I think they want to raise rates really, really badly. I think that there are certain things being discussed around the table right now that none of us happen to understand. But from everything that we're hearing from the majority of the board, they want to raise rates. So I think that barring anything disastrous in the data, we will see 25 basis points on the 16th of December.
And that's the issue, right, Dagen? I mean, there's so much pressure for the Fed to raise rates, even though the economic signals probably suggest perhaps the economy is still in a weak mode.
It does look shaky at times, depending on the numbers that you look at. But you've heard time and again on this program what Ken Langone said. Get up off your, let me paraphrase Ken Langone. Get up off your butt and raise interest rates, finally. We heard that from Wilbur Ross as well, that there are a lot of business leaders who say that we need some sort of certainty. And we are not in an economy here that says crisis. These are crisis levels. Absolutely. And they've been sitting on the sidelines for too long.
Maria, my My favorite comment was from Janet Yellen when she was like, well, we're looking at what's happening with global banks around the world. Well, why don't you look at what's happening at home, Chairperson Yellen? I mean, come on.
Yeah, there's no reason to be at such extreme measures. This is not DEFCON 1. This is not 2009. They wait long enough, it might be again. But again, that goes to financial instability. And the longer they wait, the more the pressures build in the system. That's not a good thing.
So, do you think that raising rates in 2016, an election year, makes the Fed look political? Do you think that they want to avoid doing too many moves in 16?
I certainly think that optics are one of the main reasons that they would prefer to pull the trigger on December the 16th, so that they could appear to be less politicized. I don't necessarily buy that they're not politicized, though. That's a different discussion.
Well, you know, she's going to get, Janet Yellen's going to get bashed by these candidates. You've already started to see it. Yeah. And I just want to point out, you know, she has a term. She will leave. You don't have to renew her term. She'll be out in basically 1 year after the new president is inaugurated. So they can say what they want to about her. And I mean, Rand Paul was kind of touching on a note, but the way he phrased it at that debate, listen, the dollar is 22% stronger, as John Helsenrath pointed out, since 2008. And we've had sub 2% inflation in this country for the last 3 years. So don't talk about destroying the value of the currency. The purchasing power of Americans is actually better because of that.
Absolutely, it is.
Yeah,
but it is interesting to see when it comes to Yellen's position. It's extremely rare that you see dissension at the Board of Governors. And I think if we've learned anything since the September decision to not hike, it's that Yellen is having a hard time holding together a consensus on the board, because you see Fed speak go in every single direction. And I think that speaks to the pressure her leadership is under right now.
Yeah, and especially when you keep looking at different data points which are suggesting that perhaps the Fed may not want to raise right now. So we'll see about that. Danielle, thank you.
Thank you so much.
Danielle DiMartino Booth joining us at headquarters.